so someone asked me a question over Trendlines, and their question was, to what extent do you make use of Trendlines? Do you wait until price reaches those areas first before considering trades? And I wanted to discuss that. Really, I kind of, I'm more of eyeballing, in a way. I'm much more concerned with it's late at night, so keeping my voice down a little bit, but I'm much more concerned with horizontal, highs and lows. In other words, a channel is really a trading range. Trading range is really a channel. One's sloped, the other's not. I'm much more concerned with things like this, price falling below lows and reversing up. I'm less concerned about, sure, we had a channel over here, and, arguably many ways to draw it. The one thing about channels is I try not to get too caught up in drawing channels, and the reason is there's so many different ways to draw it. I don't want to trade like this where you keep drawing and drawing and drawing, because to me that's too much clutter. I like very clean charts. When I take trades, this is, for the most part, this is the chart. This is about exactly what my chart looks like. I don't like a lot of things on it. Sometimes in the morning I'll add the session break if it's hard, if price is blended in, kind of like over here, just so I can be more, easier to see it. But other than that, yeah, I don't wait for, I say that, I don't wait for price just to hit a trend channel line then immediately buy or sell. So for example, let's look at a day like this. My one thought is, here's the open, strong enough breakout, second leg down, so probably sellers on this close. However, bulls made money buying below, probably a second leg down, but now micro double bottom, possible opening reversal, we may get back into this range, and I want to buy, and I certainly want to buy back shorts, and maybe go long. Up here, well, to me, yeah, it's a, let me do it like this. Yeah, it's a possible channel. Sure, I could draw a trend channel line. I could draw here, here, here. I could draw one down here. I do pay attention to channel bottoms. For example, one first push, second push, maybe we'll form a third push, maybe third push is here. I pay attention to that and then expect 2 legs up kind of thing. But really, when I'm over here, I'm thinking, okay, strong breakout. We may try and break the prior day's high. However, until we get above a major lower high, if the more we go up, the more interested bears will be in selling. So unless we get it really, what's the next bar going to look like? Doji. Now I'm thinking, well, looks like a leg in a trading range. We may have to get a pullback. And I'm thinking this isn't good. Maybe this might be a lower high. Possible we could form a bear channel. In other words, it's a trending trading range day. Upper range, lower range. Then when I see that, I'm thinking this is bad. You had a lot of bulls buy this close. They couldn't scalp out for a point. Now they're trying to get out of break even, and now we're selling off. So, if I was long, I'm definitely getting out of shorts, or getting out of shorts up here. So, as you can tell from what I'm saying, I'm much more, I don't draw a lot of channels, and I see the channel, but I'm much more concerned about what's going on in terms of, are we breaking strongly above? Are bulls taking profits? Are bears probably going to make money? It looks like a trading range, so we're probably going to test here and may test this low. Micro channel, first reversal up should fail. So if anything, I'm selling, stop up here. We got our leg down. Tighten up channel again, first reversal up may fail. So I really don't want to buy. Maybe I'll get out of shorts. Decent short here. Always in. Bears probably got out above. They got to get short again. Sell here, stop up here. Or sell 3 bars down. Do bears, do they get out of here? Probably not. But if they do, they got to get back short again here. Maybe they get out above, but holding above the moving average. If they do, maybe sell again. But still, it's pretty tough. Here, strong enough breakout, probably second leg down. I understand it's a channel, but the channel's weak, and I'm thinking we're going to get an upside breakout. However, until there is an upside breakout, there is no upside breakout. I want to see this. That's what I'm looking for, but we're not getting it. We're getting legs in trading ranges. Dojis, bull breakout, dojis. We're not getting decent bar, bull breakout, 3 more bars up. So I'm much more paying attention to the buying and selling pressure. And I'm not trying to dodge your question, but that's really the best way I can describe it is, and, again, bulls get out here. I'm thinking, okay, negative few legs up, but we got to break above the moving average. So I pay a lot more, I do pay attention to the moving average a lot. Through here, if price starts stalling at the moving average, I really don't want to buy at the moving average, kind of like today. It's a big sell-off at the moving average. I really didn't want to buy up here. But going back to over there, it showed a good point. Even here, gap up, sideways. So, we're forming possible parabolic wedge, strong sell-off, sell for any reason. Bulls always in, bears probably get out, couple legs up, but this looks like a minor reversal. So 3 bars up, negative pullback, bull breakout, but bad follow through here, another bull breakout, bad follow through. Maybe some sort of, call it a measuring gap if you want. It's more of the middle of the kind of trading range area. Strong bull breakout, bad follow through again. High up in the range, 50% pullback. We tested the open of the day. Always in, bears probably will get in again and bet on a retest down. So always in, bears get short. Maybe they get out here. Maybe bulls buy, but if they do, bulls probably get out here or on the third close. Maybe the bears sell. But again, if they do, they got to get out maybe over here. They get back short here. And, strong enough for a second leg down. Well, it's actually the end of the day. So that's more of how I'm thinking. And, yeah, I get it. Big breakout, so possibly a spike and channel, which we ultimately got. Maybe the channel started here. Maybe the breakout started here. Maybe it ended here, So I get it, Maybe on larger time frames, I pay attention to channels, spike, channel, spike, second leg down. This looks like a trading range, so enough, maybe a final flag. So if we get a bear breakout, we'll probably reverse back into it and form a larger range, upper range, lower range. I think of everything more as, let me put it this way. I try to see everything as a form of another. So a breakout is the strongest possible move. And that is the 90%, 80% probability where for less than 10% of the time, 10% of the day, there's an 80+% chance if you sell this bear breakout, you'll make money. And if you buy, you'll lose money. But then that immediately disappears, and then you're in a trend, channel trading range phase. I try and keep channel and trading range really interchangeably the same. And for me, you have a breakout, then you form the channel, and depending on how tight the channel is, will depend on how, if it's a really tight channel, then it's, let me try and give an example. So this is pretty tight, so it's more of a breakout. Let me scroll back to this day. So, I think of breakouts, and then breakouts form channels, and if the channel is really tight, it might be a breakout on a higher time frame. And when it gets broad and gaps start to close, the channel becomes weak. So let's look at this. So bear breakout, but lots of sideways, so possible final flag. I'm not worried so much about drawing a channel. When I see this, my thought is, maybe I can walk you through this day. I'm basing my trades based off what's in front of me. And maybe that's a weakness of mine. Maybe I need to, I need to get better at drawing channels, and because sometimes I don't see it. Even over here, my thought is, okay, we sold off, we broke to the downside, clearly always in short, maybe a measured move down from something, but we're clearly beyond that. My thought is bar 1, bar 2, always in short, sell for any reason. Micro channel, first up will fail. Again, strong enough breakout, no real good buy signal, very tight channel, sell for any reason, but you need a wide stop. We may test the moving average, maybe even all the way up to here. If a bear gets out, they've got to get short again. Strong sell-off, parabolic consecutive sell climaxes here, 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 here. So at this point, I'm thinking, okay, this is, again, someone asked a question, and I'm going to try and reread it real quick. I may have to, so real fast. Someone asked the question to Al about, measuring gaps versus exhaustion gaps. How do you tell when a breakout will have a second leg down or be a reversal and have two legs up in this case? And Al said, when you get a strong breakout at the start of the move, it will probably have a second leg down. When there's a big bar late in the move, it'll probably have a reversal up. With that said, the big bar that's late can sometimes have a reversal. So here, this is kind of my thought process. This is kind of how I always try and think. So strong enough sell-off, second leg down. Again, possible measuring gap. Is this a measuring gap? Well, maybe, but when we see this and price clearly breaks below, I'm thinking, okay, maybe it's here. And then I see price starting to stall. And then as soon as we get down here, I see price immediately turn up. Nonetheless, consecutive sell climaxes. My thought is, okay, profit taking area. We may get two legs sideways to up. And this is probably not going to be a measuring gap. In hindsight, it was. But at this point, I'm thinking, probably not a measuring gap. But I'm also thinking first reversal up will fail. So, my typical goal would be to sell, and if I got out, try to get short again, and get out somewhere down here. Maybe get out above here, definitely get out above here, get out below here if I'm lucky. I don't really care. And if I get long, stops down here. Do I get short again? I probably wouldn't sell again here because I'm thinking we may test closer to this gap. And then if I see this, I'm definitely getting out of shorts because that's the same thing. I'm thinking this is exhaustion, two legs up. And I'm especially thinking leg in a trading range, exhaustion, two legs down. And it's 20 gap bar short, and bulls failed to close this gap. So then my thought is, well, maybe this is trend from the open. Could be one of those crazy days where you get a bunch, big move down. I'm getting out of longs. I'm selling one of these closes, and I'm thinking, okay, first left will fail. So strong sell-off, first left will fail. Strong enough breakout again. This might be a measuring gap here. But strong enough down. Problem is bear breakout, bad follow through, low too short late in the trend. It might be the end of the move. And so 3 pushes down. 1, 2, 3. Second leg down, bear breakout, bad follow through immediately. Another micro double bottom. I'm definitely getting out above here. 6, only 1 bar in the past 6 bars, so we might be always in long consecutive sell-offs. It's possible that wedge bottom we get another push down, but if anything, I'm buying, betting on a second leg up. Strong enough breakout, probably second leg, more up, stop down here, and then the end of the day. So I hope you understand what I'm saying. I hope I'm clear. When I see a broad channel, which I suspect you're talking about more so, I'm not that interested in. I'm thinking trading range. Even here, 65. This is the 6,500 volume chart, and I know this person likes. I think this is pretty much the type of chart he uses. So, let me talk about it in this perspective. To me, price action, you can trade on any chart as long as you can keep up with the bars. So let me run you through it. I can't go any further back, but strong gap up. I have 2 thoughts: far away from the moving average, and my other thought is we're probably, 2 things. We're either going to go sideways to the moving average and turn up, go up for a little bit, then go sideways to the moving average. I think we're going to the moving average. Small chance we break strongly below and fall down. But I don't even really need to see what's back here. I kind of know, but I don't really need to see it. Bar 1, bar 2, maybe always in short, but again, not really a great sell. Stop above bar 1, better here. Clearly always in short. Stop up here or up here. Type channel, first left will fail. Many bars down. Stop up here, probably first left will fail. Got to think wedge bottom. Maybe measuring gap, measure move. It's like this, like that. Doesn't really matter. But regardless, I'm staying short. And then low too short, late in the move. Look how strong these bars are. I'm thinking exhaustion. We have our second leg down. We might get a second leg down that might be small, here, and then a little up, a little down. But, look what happened over here. I'm definitely getting out below, or hopefully I'm going long here. So many bears who saw this close trying to get out. 4 bars up, 3 bars up. I'm buying anywhere in here. And my thought is tighten up channel, first will down will fail. More up, still going to fail. More up. And here, we're back at pretty much the high of the day, top of this channel. I'm thinking trading range. I'm thinking, we had a measuring gap possibly here. So if I can get out here, I'm getting out here. And this is one of those small, subtle double tops that you hear I'll talk about pretty regularly. Maybe this is, usually these, they're very subtle. You get them in a trading range. I'm referencing, if I can find it. Surely I can't. I'm referencing here. So subtle double top, second leg down. Usually the second leg down, 50-50 chance you get 2 legs down. Usually the second leg down is pretty extreme. here, it's possible first leg pullback, second leg. So if I took the short, I'd get out above here, maybe go long, but I'd also be thinking minor reversal. We may get that strong second leg down. So I'd probably sell again here, or maybe sell this close, stop up here or up here. And boy, it'd be hard to hold short. But I am thinking tight channel, so first up will fail. So I try to keep it very simplistic. Even over here, gap up sideways. Maybe bearish sell, but pretty weak. Bulls are making money easily. Then we rallied up, sold off, and still going sideways. So we've had a trend line break to a new low, decent buy here. We fell below it, immediately found buyers. Take a bar. If I didn't buy here, I'm getting long here. Stop down here. I'm holding all the way up here, and then what do? I'm thinking first up will fail. If we're really lucky, maybe we get this to here, but not enough for always in short. We just, we basically tested this high right here. So a lot of bars up. Again, first down will fail. Maybe we're forming a wedge. One, first push, second push. We already have a wedge here. 1, 2, 3. And, now we're selling off. But again, 20 gap bars short. We may test higher. And then, so, and we just basically went sideways. I don't want to go always in on the whole day. It's it's a lot of bars, and it's just more bars than I'm used to. I think, yeah. Anyways, when I'm looking at channels, I'm concerned with, are we forming a wedge? Is it 3 pushes up, 3 pushes down? So what I intended to be a really short answer ended up being a long answer. I envision the trend lines. I think, I do see a channel, but my thought is trading range, bear channel, bull flag. It is a bull flag. Bull channel, bear flag, form a trading range, gap down. So I hope that answers your question. Comment below if it did not, and I'll try and answer it in a more clear way next time. Thank you.